Hello, this is Ahura, and we'll be with you with the global economic outlook in the week ahead. The last week of 2025, finally, week 52nd. Uh, let me say the Merry Christmas and Happy New Year in advance. Most probably, we will not have the weekly outlook video for the next week, and then we will be with you with the new year and the new settings, new setup. We will see. Let's see what's gonna happen. Okay. Uh, as always, let's start the week with the previous week. Start the video with the previous week review. Last week it was somehow one of the most busiest week of the year. 2 weeks in row, we had a very busy week. 2 weeks ago, we had Federal Reserve meeting with so many other data, and then last week we had central banks meetings across the world in Europe, United Kingdom, Mexico, Turkey, Norway, and many other economies. However, the most important data that we can talk about is about the U.S. inflation data, U.S. labor market data, and then the central banks meetings. Starting with the day, we had a very important economic data from China as well. I have to mention about that also. Industrial production, they were weaker than expected. Retail sales, it was less than expected in China. Generally, the economic data from the China also was not as good as expected. Those were the data which we had on Monday. Tuesday, it was a light day. We didn't have much important data. We had some manufacturing PMI numbers, mostly again showing that the service sector better, manufacturing sector is weaker. That's across the board, especially in the Eurozone. And then later in a Tuesday evening, on Tuesday, we had the U.S. labor market data NFP numbers for October and November. The October data, they were the data that it was published with the delay, and November data also published with the delay, but not much like October with the 1 week delay. However, the data which we had, the data was for the period that we had mostly, but in the U.S. Government shutdown period. The October totally, the whole month, it was the shutdown. The government was not working. And in November also, in the second week of the November, when the government started working, few days again they talked that they can come back to the work and start working. That's why the data which we had for the labor market was not fully data. That's why that was the reason that market didn't look at these data such a series as like as serious as it's supposed to be. So we continued with the labor market data. Unemployment rate in the United States increased to 4.6%, while the 64,000 newly created job we had for November. However, we had average earnings only with 0.1%, with the 0.1% growth in November. That shows that the earnings are much lower than standard and usual numbers, which can be the negative news for the U.S. economy. At the same time, can be somehow the positive signal for inflation numbers. And retail sales also was flat in October. That again says that for the October, especially October and November, the months that we are expecting to see the better retail sales, better GDP growth. Usually, that's supposed to be as we're getting closer to the New Year. If the numbers which we had, they were not such a brilliant number on Tuesday. Then we had a Wednesday. Wednesday we had inflation. The most important number, it was inflation numbers from Japan and also from United Kingdom. Japanese inflation. They showed the Japanese inflation published on Wednesday, right? No, Japanese inflation published on Thursday. We'll talk about that. No, Friday. Sorry, we'll talk about that on Thursday. Wednesday we had Japanese export and import data, which while the export increased by 6.1%, import increased only 1.3%. Another reason that with 1.3% we can say weak number, as it is confirming one more time, as mentioned previous week as well, the lower demand, which started within Japan and China, and continued that in other economies. Later, we saw that the weaker retail sales and imports in Russia as well. These data confirms that the lower demand and the less imports means the lower demand. However, the 6.1% export for the Japanese economy also, while it shows a better export, but at the same time, that these are the nominal data, and 6.1% with the yen around 155, 156 against US dollar cannot be brilliant. I mean, we cannot compare with this say that, okay, 6.1% this year, last year, on the annual scale. We shouldn't forget that the last year, the Japanese yen, the rate of the Japanese yen against US dollar, and we should talk about it. I mean, we should think about these data a little bit more. United Kingdom published its inflation numbers that market surprised with 3.2% for headline and core inflation, which was supportive signal for the Bank of England to cut the rates. Then we had inflation data from Eurozone. No surprise, 2.4% for headline for core inflation, and headline inflation increased to only 2.1%, lower than 2.2% expected. However, we had a small surprise. I mean, it was in line with market expectation, but I'm saying the reason that I'm saying surprise, because the negative inflation in Eurozone, again, is not a really good signal for the European economies, as these numbers one more time confirms that the European demand, Europeans, they're spending less money. There is a lower demand. This lower demand, lowering the inflation, they're the main inflation driver or price driver for the current situation. U.S. mortgage rates published slightly increased from 6.33 to 6.38%. That's why the application for the mortgage applications dropped as the market expecting. I mean, the market believes that these numbers are somehow high, but at the same time, they don't expect to see the lower rates in the very near future, maybe in next like 6 or 7 months, but in near future, it's really hard to say that the rates should be calmed down that faster that the market expecting or wants to wait for the lower rates. In other places, Thursday, the next day, was very important day, as we had two central banks meetings on Thursday, two very important central banks meetings. Bank of England at the first stage, they cut the rates by 25 basis points in line with market expectations. And the Central Bank of Eurozone, or ECB, European Central Bank, held the interest rate at 2% as market was expecting. The only surprise that we had in both banks, that they lowered their inflation expectation and they increased their economic growth expectation. Another signal that maybe, especially for European Central Bank, that maybe they don't go towards the rate cuts so fast, even continuing the rate cut actually to lower than 2%. However, even there are some talks that maybe European Central Bank, they even increase the rates for next year. Then after that, you had inflation numbers from United States, where we were surprised with only 2.6% for the core inflation and 2.7% for headline inflation. Both of them, they were surprised. They were less than expectation in the previous months, confirming that somehow the inflation is lowering. However, again, same as the data that I mentioned about the labor market, for these data also is the same. These numbers are not fully reacting or reflecting the market condition, as in the period that they're covering. Some part of this period, the market was, we had a government shutdown. The data are not fully covering the market condition and market situation. That's why market participants, they didn't take them so serious. And finally, on Friday, we had the Japanese inflation numbers, where we saw the inflation for headline inflation slightly east to 2.9%, and the core inflation remains steady at 3%. That's why the central bank, I mean, not that's why. I mean, the reason I'm saying that's why, because it's indirectly that's why, because usually when the inflation is high, we also the increase in interest rates, which the central bank increased the rates by 25 basis points. But at the same time, again, that's why, because the lower yen increasing the import price, the producer price index, and the central bank again increased the rates to support the yen also against its crosses, because the spread between the yields in Japanese economy and yields in other economies, especially United States, they have a very big gap, and that gap puts the Japanese currency under pressure because of the carry trade. That's why the central bank had really no choice than hike the rates by 25 basis points, and that was the reason of the meeting between Mr. Ueda, BOJ head, with Mr. Takaichi, the new prime minister in Japan, where Ueda was trying to convince Takaichi that why they have to and they need to hike the rates. Those data, they were the most important data that we had last week, but for the week ahead, still the market will not be so calm. So light, but still we have a much lighter week, which is started with the central bank in monetary policy meeting, interest rate decision, monetary policy meeting of Chinese Central Bank, or People Bank of China, PBOC, where we don't expect any changes in the policies and the rates. I mentioned before that, we talked about that, the Chinese economy most probably can reach its expected growth between 4.7% and 5%. That's why the central bank and the government, they do not see the need of changing the policy for now. But for 2026, if they want to reach their 5% target that they're expecting to see, they need to have more stimulus, or they need to see the rates a little bit lower. Most probably we can see either the central bank's rates lower in China for 2026, or we can see the reserve ratio lower again, to cut it and make it lower, to support the economy and to support the cash, especially for the businesses. But for this week, we expect to see the 1 and 5 years loan prime rates at 3% and 3.4% and 3.5%, with no change. We will have the GDP numbers from United Kingdom later on Monday, where we expect to see the British economy to increase by 1.3% in the third quarter, with only 0.1% quarterly growth. Again, confirming that the UK economy is really, economic growth is really facing more challenges, and the policymakers supposed to do something. This 25 basis point rate cut may be supported, can somehow support the British economy next months, but I don't think that can be enough, and most probably British economy and the central banks need to have more measures and more stimulus. In Canada, raw price material is supposed to slightly ease compared with the previous month, and that can support the most probably another 25 basis point rate cut after pause that we had in December. In January, most probably we're going to have the 25 basis point rate cut in Canada, because economic growth needs support, and the Canadian Central Bank will probably do that to cut the rates. Even if they don't cut the rates on January, they may cut the rates on February. PC price index and personal income spending are the data that most probably supposed to be published actually on Tuesday from United States, but I'm not sure if they will publish or not. However, even if they publish, even if we saw these numbers, market will not take them so seriously, because these numbers will be the numbers for October 2 months ago, and the period that the market, the data was not covering so good. That's why I don't think that the market will take that so seriously, even if they publish. I'm not even sure that they're going to be published. However, for the week ahead in U.S. economy, don't forget to follow the bond yields. One of the main market mover in the market index, the index for the markets in the last weeks, usually they're the bond yields. Many investors and the market participants, they are changing their their cash and actually their investment between across the different assets. Saving the profit in the stock market usually increase the demand for the cash and bond. That's why seeing the bond yields increasing or lowering or changing in any changes in the bond market can give another signal for traders and investors that what's going on in the market, especially for market analysts. So don't forget to follow this 3 months, 6 months, 2 years, and 5 years bonds yields and auctions that we're going to have during the week, especially in the United States, not just in the United States, but especially in the United States to understand what exactly is going on in the market. Wednesday, we're going to have the BOG core inflation data, where we expect to see the core inflation measuring by central bank in Japan to remain unchanged at 2.2%, while the GDP numbers in Spain is supposed to show the Spanish economy is moving much better than German, much better than French economy, but still 2.8% quarterly on the annual scale, and 0.6% only the quarterly growth wouldn't be that positive data, but compared with the 0.1% expected in the United Kingdom or 0.1% in Germany, 0.6% in Spain can be positive and could be read as a brilliant number if you compare with 0.1% growth in UK and Germany. Then we're gonna have this durable goods orders and core PC price index for the third quarter. If they publish the durable goods orders in the last 3 months, we had a positive numbers usually for the durable goods orders. These numbers will cover the orders for October. Again, the data that they will be published with a little bit more delay. But the numbers for the 2 months ago, it's not for the November. The numbers are the numbers for October. I don't think that the market will take them so seriously, but at least they can give us some idea of what's going on there. And most probably we can see some better than expected, slightly positive data for orders as we are getting closer to the New Year Eve, and the market usually getting more trying to have, the people usually, the consumers trying to spend a little bit more. That's why I do expect to see a little bit better numbers there, but not brilliant number. Better, but not the brilliant number. Core PC price index for the third quarter, which is supposed to be published on Wednesday, and we are expecting to see 2.6% as the core PC price index for the third quarter, which is if confirms can show that the inflation is still sticking in the United States. Even thought we have some numbers that it shows that it's lowering down, but still the inflation should be watched more closely, and we shouldn't trust one time such a big drop, especially for the period that we didn't have too much or enough data, not too much data or enough data to talk about that. Housing market also will be very active in line with industrial production, manufacturing production, and other data. But for the housing market generally for November and December, we expect to see a little bit more activities in the housing market, getting closer for the new year. Most especially for the November, maybe for December we don't see such good numbers, but if for November, most probably we can have the data. Housing markets, the private market, so the government shutdown wouldn't affect generally the numbers that we have around the housing market. So we can again trust these numbers as showing the real activity and the real condition in the housing market. So, but we are a little bit positive about the housing market and the housing data. About industrial production and manufacturing production in United States, both of them for November will be published. Industrial production and manufacturing production, usually the activities manufacturing the production side, not just in the service side, in the production side, in manufacturing side, they were less than expected in the recent months. In some months, we had even in a negative territory. For November, industrial production is supposed to increase by only 0.1%. This very weak number. While the Richmond Manufacturing Index and other manufacturing index, all of them, they can continue to stay in a negative territory. Capacity utilization also, I don't think that can be changed from 75.9%. Even if we can see the changes, that change can be the negative change for them. Yeah, that was for the Tuesday, and Wednesday it's going to be a half day working, and that's why we will have some data which is supposed to be published on Thursday. We will have them on Wednesday, like initial jobless claims. Usually the jobless claims, initial and continuing jobless claims. Initial jobless claims supposed to fall to 220,000, lower than 224,000 that we had in the previous week, and that can show that the labor market is still strong. Then Thursday, it will be the totally full holiday. Yeah, and a Friday also. However, on Thursday and Friday, while other markets are closed in Japan and some countries like in Turkey that you're not closed, we will have some data, especially Friday's labor market data from Russia and from Japan shouldn't be ignored. Japanese unemployment rate supposed to stay unchanged at 2.6%, while for the Russian, we expect to see unemployment rate at 2.2%, remain actually at 2.2%, not change. Retail sales in Russia also probably most increased by 1.8%, lower than 4.8% that we had in October. November data should be much better than this 1.8% market expectations, but again, this lower demand generally and spending across the world is continuous. It's not just about the Russia and most economies, as you saw, the lower import in China and other, even in China, in Japan and other economies, all of them in Germany also, we saw that last week that the import in German import was negative 0.1%, dropping by 0.1%. Generally, this negative territory about the spending and the demand is spreading across the world. Looking at the chart, we can see that the market right now, market risk, so let's start with the VIX. So market risk at 17.24. It's much less than previous week. I mean, the starting of the Monday and Tuesday that we saw the risk around 18.60, much lower than beginning of the week, but still are not so low. Getting closer to the year end, lower activity in the market, lower I mean, the risk in the market, when you have the less activity, the risk also is less. When you have the more activities, we can see more swing and more risk in the market. That's why we expect to see that VIX to slightly ease between 16 and 17, but I don't think that we can have the VIX under 16. That's why, and also the getting close, this stay lowering risk, but still high. I mean, it's going to be lowered, but it's not going to be, but still it will be high compared with the 14 and 15 standard levels that we're expecting to see the VIX. That's why, and also the getting closer to the year end, the more need for the cash, for traveling, for spending, will put the US dollar in demand, and we expect to see the dollar index to continue its general side movement with the uptrend tendency around 98, a little bit higher. The same condition we can expect for the gold. The gold also usually side in these days will be side movement with the more demand, especially for the monies that they're coming out of the stock markets. For this saving the profits before getting involved in a new buy, that can move towards, and because so many people, they don't want to cash it out of the market and to pay the tax. So to don't pay the tax, actually, to avoid paying the tax. That's why we will probably see more demand for the gold, and the gold price again around 4,250, even 4,400, these areas. While the same expectations is going on for the energy, for the gas and oil market, higher, more demand for the the more demand for the traveling, that can increase the demand for the energy, the traveling in the streets. I mean, the street traveling between the cities by the car, and also traveling by the more flights between the countries. All of them, they increase the demand for the energy, for the fuel, and that's why we expect to see the oil price to see it's like the side movement with slightly upturn tendency around 55, 57, 58, around these numbers, but not high, because the market knows that the supply is so much more right now than compared with the demand. The gas price also between $3.9, $4. Those areas will be the most expected areas. About the stock market, taking a profit and saving the profit at the end of the year cannot increase the demand. At the same time, you still have too many uncertainty about the U.S. economic condition for 2026. That's why I'm not a positive for the U.S. stock markets. Doesn't matter for the S&P 500, NASDAQ, or Dow Jones. For all of them, I do think around the side movement with the slight downward tendency than any other movements. Saving the profits will be one of the main important reasons to not being too much positive about the US stock markets. Bitcoin and other cryptocurrencies are the same. Usually, don't forget that some options they will be expired at the end of the next week, at the end of the last days of this year, and that can put the pressure on the cryptocurrency market. At the same time, we don't have any positive news or positive market movers for the cryptocurrency right now. Technically, now we can say the first resistance actually around $90,000 20 daily moving average, and above that we will have 92 and $94,000. Previous $97,000 as a pivot most probably changed to $94,000, and we can say above $95,000 around this area is the new around this area is the new K pivot. Moving the prices around above $95,000 can open the doors for higher numbers, but lower than $92,000 or lower than the $90,000, we can say the price will be negative, and we can expect lower and deeper levels. That was what happened previous week and what we're expecting to see in the last trading week of 2025. Hope it was useful for you. Again, Merry Christmas and Happy New Year in advance. Talk to you soon. Goodbye.